You're watching CapitalCosm. My name is Danny. It is July 28th, 2025, and my guest today is none other than Mario Innecco from the Innecco 64 YouTube channel. Mario, thank you so much for making time to come on the show, my friend.
You're welcome, and it's nice to be with you again, Danny.
Yeah, likewise. Let us just dive right in here, Mario. So many things to talk about, but I want to kick it off with you. You can kind of set the tempo here. What is on your radar screen right now? What should be on the radar screen for gold and silver and precious metal stackers in general?
Yeah, I mean, the economic monetary situation hasn't changed. We've seen M2 in the US make new all-time highs. So in my book, that's monetary inflation. It's going to continue. We've got the Fed meeting starting tomorrow and ending on Wednesday. Markets don't expect anything from the Fed, but you never know. The fact that Trump has done a deal with the EU and is postponed the tariff implementation for the Chinese tariffs for 90 months. That might make the Fed a bit more comfortable in cutting rates. The other thing, Denny, that I haven't really been looking at too much, and that's more the geopolitical aspect. And probably because here in the UK, they've censored a lot of stuff since the Ukraine war started. For example, where we don't have access to RT anymore, RT news in Russia. But someone in Switzerland today told me that they have access there to RT. And apparently yesterday, President Putin or the Russians, they had to cancel a naval exhibition in St. Petersburg because of a threat of drone attacks, or there were drone attacks. Apparently they came from Ukraine, but apparently coming from the Ukraine would be really difficult to go all that distance to the Baltic, because St. Petersburg is in the Baltic. So this friend of mine thinks they're provoking Putin and that it's NATO. So I think that's really serious, and we're not hearing much about this, not even in the alternative media in the West. And why is that important? Well, because it could lead to some kind of confrontation between NATO and Russia, and that would be very serious. And you want to have gold and silver, especially in that situation. It's not why I have been stacking gold and silver, but it makes it even more necessary, I think.
Yeah, we're at the end of a fourth turning cycle, which happens every 80 years or so. And it's basically the end of a existing world order, and we're heading into a new world order, or a new world order, with, if as some other people might like to call it. But just kind of sticking with Russia here for a bit, Russia and Ukraine. Initially, President Trump laid out a 50-day ultimatum for Russia. However, given recent comments, he's signaled that he's going to bring that down to, I believe, 12 days now, 12 or something like that. It's essentially been reduced down to a fraction of what he initially promised to give Russia. What's the game plan here in your estimation? I know we're not like geopolitical analysts, that's not our main focus, but if you were to, just based off of, your hunch, why do you think he's made a radical shift in his policy regarding the Russia-Ukraine war when he was initially very open to negotiating with Russia and figuring out a peace deal between the two countries? Now he's playing a little bit more hardball here.
Difficult to say, but I can only speculate. Maybe it's got something to do with some of these files, and maybe it's the deep state. They're playing each other against each other. Trump is saying, "Yeah, I won't release this," and but then they say, "Well, if you do this and that, maybe the deep state is behind it, because it makes no sense that he's reversing everything." It's a little bit like the economic situation or the market situation uh, just around April time when the market started tanking, we would hear Besant or Trump saying, "Well, this is necessary. We've had a huge bubble. Uh, we can't just focus on the stock market." And then when it got really bad, the whole focus is now in the stock market. So, yeah, I think he's got a lot of pressure from people behind the scenes, people who probably donated a lot to him, so he's like changing his tack. But yeah, I heard about that change in deadline as well from this guy in Switzerland. He told me about that too.
Mhm.
It's difficult to keep track of everything.
Yeah, yeah. What in what way could Russia stand to benefit from a higher gold and silver price? Do they stand to benefit from higher gold and silver prices, considering that it does appear that Europe doesn't have any collateral when it comes to Russia's got the edge up when it comes to their commodities and natural resource stockpile. But does Russia stand if they were to want to push the price of silver or the price of gold higher? Does that help them in any way? Is there any like form of geoeconomic warfare that they could use in that regard?
I don't think they care much for the price, even though it helps. And I don't think that's what they're trying to do, the Russians. But they do hold a lot of physical gold, not just like underground reserves. And the fact that Russia is one of the biggest gold producers in the world, and it's also a huge commodity country. But yeah, I think they hold it more as a strategic monetary asset that you can depend on times of uncertainty, especially after 2022, when their fiat reserves were frozen, and they're still frozen from my understanding. But gold is it's nobody's liability, and if you hold it at home, it's you can do anything you want. You can trade with any country. It's recognized the world over, and I haven't seen Trump or the Treasury talk about sanctioning gold. You can't really sanction gold, so. But I also, yeah, that deadline is serious, isn't it? Because it could backfire because China would be impacted by that.
Mhm.
I- China, Iran, and other countries that buy oil from Russia. So yeah, it's all getting very uncertain, and that's the way the world is right now. And I think Greenspan, I have the book on my shelf back here. He wrote a book 10, I don't know, 11 years ago, The Age of Turbulence, and he kind of forecast this scenario. And I think we are in the age of turbulence. I guess, like you said earlier, it corresponds with the fourth tourney.
Yeah. And many people forgot about this, but around this time last year, Russia set up a silver reserve. And if you look back at the price of silver about a year ago from today, it was $27. And today it's $38. So they set it up. We haven't heard anything from it. Have you gotten any updates in regards to their silver reserve that they were
Mm,
accumulating supposedly?
well, they gave a number that they would buy every month, and I didn't think it was that much. But they also uh, were doing platinum as well. So it was
Interesting.
silver and platinum, and so platinum is also running, doing well. And I think the reason they've done well, even though the amounts and the figures didn't seem huge, is because these markets are so leveraged in terms of paper that you just need a consistent physical buying from a fairly large counterparty, i.e., the Russian state, to to yeah, to affect the price. I think it just goes to show how leveraged it is. And David Jensen, I've had on my channel, he's spoken about how the LBMA is like the silver OTC promissory note spot contract is hundreds of times. like leveraged.
Yeah. Speaking of platinum, platinum has been making some real moves here. From a relative basis, do you see more upside on platinum, on silver, on gold? Between the yellow metal, obviously, and the two white metals. If you had to choose one, I mean, I could presume that you probably have exposure to all three, but if you had to choose one, which one do you anticipate outperforms from here?
I think silver, yeah, silver outperforms, and then platinum, and then gold. But as I tell my viewers, because they ask, should I sell silver to buy gold? And I say, if you want, but I, I try to just get rid of spare fiat to buy both. But I guess you could buy more silver now than gold, or you could go uh, through the mining space as well, to leverage. If you're into that kind of stuff, there's the silver miners as well.
Yeah, so silver, platinum, and then gold. And taking it back to what you initially brought up at the start of the show, talking about interest rates and some of the back and forth between President Trump and Chairman Powell and Secretary Bissett. If there doesn't appear to be any predictions or certainty or confidence that they will cut rates this week, this coming Wednesday. But why is that? Why do you think there's a split between President Trump and the Fed? And if they do cut rates, will that be enough to get what they need, i.e., easier to get the economy moving? Considering that the last time they did cut rates, we've seen about a 100 basis point cut over the last year and a half or so. And you look at the 10-year, 10 year actually moved opposite to the cuts.
Yeah, and
So,
so have mortgage rates, and I think Bissett and Trump mentioned that they want to see the mortgage market get kick-started, because what's happening is people who have long-term mortgages, uh, uh, they locked in during COVID at very low rates. They don't want to sell their homes because they would have to refinance at a much higher rate. So the real estate market is kind of moribund. And but like you said, they started cutting rates September last year. They cut by a total of 100, and the 10-year yield has gone from 3.6 to 4.4. So I think that's what the Fed is concerned about. They're concerned that if they cut too aggressively in the short end, you're gonna see the longer end rally quite a bit. It's going to affect their balance sheet because they hold a lot of treasuries. They're already sitting on hundreds of billions of losses. And it would actually backfire for the Treasury. The cost of financing interest payments would rise. But I would think Besant would understand that, having been on Wall Street as a hedge fund manager for so many years. I can understand why Trump doesn't understand that. He's not really a bond person. He's a real estate developer. So yeah, I think that's why there is division, and it doesn't make sense either to cut rates right now. You showed that chart of M2 making all-time highs. That's just gonna fuel the growth of M2. We've got the stock market near all-time highs. I mean, the Buffett indicator, market cap of all U.S. stocks to GDP is at all-time highs. I mean, do you really need to cut rates? It would. I mean, for us precious metals enthusiasts, that would be really, really good. And I think they might, because the technical picture is pointing to continued move higher, I think, in silver and gold.
Is that why they stopped cutting rates? They cut it short at 100 because they did see the 10-year yield begin to spike?
Partly, I guess. I think they haven't told us that. Maybe I haven't really combed through all the minutes of the FOMC, but one of the major reasons is that the uncertainty surrounding the tariff program of President Trump, because it does raise prices, uh, tariffs. It's not the foreigners that pay the tariffs, it's the importing company in the US, and they pass it on to the wholesaler, retailer, and the consumer. Uh, yeah, so that's a kind of rising prices, and that could lead to higher prices elsewhere, and that's what the Fed is concerned about. They say they're concerned about inflation, but technically they're concerned about prices because it's
Mhm.
the Fed that really creates the inflation. But so they can't create the inflation right now because yeah, the prices are going to be affected by the tariffs. But it hasn't been, these tariffs and the prices haven't been around that long. Need maybe at least 6 months to see what happens. So I think that's why the Fed's been waiting. Um, yeah, or some people could argue that they're being political, even though it was Trump who nominated Powell as the chairman of the Federal Reserve. So
If lower Fed funds rate saw a higher 10-year yield, does that imply that if they do hike Fed funds rate, will they then see a lower 10-year yield? If they do want to lower the 10-year yield, like I'm just doing the it's just the contrapositive, right? Looking to invest in silver or create something unique? Go to firstmint.com and use the promo code CAPC. First Mint offers premium 0.999 plus silver bars and coins, perfect for stacking or gifting. Plus, they specialize in custom minting for businesses and events. Great for celebrating milestones or promoting your brand. For quality silver and trusted service, visit firstmint.com and use promo code CAPC and make your mark today. Once again, that's firstmint.com. Promo code CAPC. And while you're there, check out this great deal ongoing now.
yeah, I definitely. I was just thinking about that as you're like preparing to ask me the question. Yeah, if they were to raise the short-term rate, Fed funds target, yeah, that would actually probably it will probably lead to a flattening of the curve. Yeah, the yield curve. That would mean that investors would feel more comfortable about the inflationary picture, and they would probably buy a little more in the longer end. And I saw, though, prior to coming on with you, someone posted on X that the inflation expectations, which is an indicator that traders use, it's at a really high level right now for the next 4 or 5 years. So it's not like a kind of environment where you'd expect rate cuts either.
I am getting reminiscent of 2020, 2021, just by the feel of this market right now. There is this exuberance. You're seeing money being uh, dumped into things like collectibles, and the stock market's making new all-time highs. M2 money supply is making new all-time highs. It does feel, does it not, that we're heading towards another wave of inflation from the one we saw a few years back, does it?
Yeah, that's right. Usually, a rising gold price is the canary in the
Mm-hmm.
coal mine for price rises coming. I mean, if you remember in 2020, gold dropped in March from like 1700 to 1450, and then it took off to 2000
Yeah.
in early 2020, 2021, and then we saw the prices rising. like the CPI. Right now, the CPI is kind of under control, but a lot of that currency and credit is flowing into financial assets for now. But when people take profit or whatever and start spending, it could flow back into the consumer price index. Yeah, and it's not just stocks and commodities that are making all-time highs and collectibles. It's also like cryptos and Bitcoin. I mean, I don't know if you get this on your YouTube channel, but I get it on the comment section. All this, it's a spam, but they're all pushing these coins, altcoins, and
Hmm.
trying to get people into it. It's just crazy.
Yeah, I mean, they flooded the zone with all these crypto bots. I mean, it's unmanageable trying to manually delete them all because they're just so easily replaced. But here is much to your point, Mario. You've got the top chart, which is the gold chart, and then the bottom chart is your year-over-year change in the CPI. And much to what you just said, when we saw this initial gold spike here, leading all the way up until late 2020, you had about a 1 year lag until you really started seeing reflected in the CPI down below, right? You saw a big move here in the gold
Yeah,
chart up above. And then a year later, literally September 21 is really when the spike in CPI began to show in the reports. Now, interestingly enough, now they look a little inverted. So it does appear we may be due for another move up because you look at the basing pattern here, it happened in October. And then our rise really began in October of 2023. So October
yeah,
could be the
yeah.
time when we start seeing the CPI begin to move up again.
Yeah, and I remember a year or a year and a half ago, a lot of people, some analysts on X, they were posting the fact that inflation or CPI in the 70s, it came in waves, like three waves, like
Hmm.
late 60s, early 70s, then mid 70s, and then late 70s. So yeah, there is this saying that inflation comes in waves. So yeah, uh, we could be um, headed for that. Maybe it starts in October, ticking up, and of course they're going to find a reason that's got nothing to do with the Fed being too accommodative, because it is accommodative, even though they want rate cuts. They're going to find like an exogenous reason, like Putin or China,
Hmm.
because they never blame themselves for it.
No, they don't. Does that mean with the clock ticking, we're now 6 months into President Trump's presidency? The midterms are about a year and a half from now. I think maybe even less. They really need to, because it appeared at first the strategy was to rip off the band-aid and get the pain over with soon and then try to recover in time for the midterms. But that window is closing more and more. It does appear like they're putting it all on growth now. They're just going to go for growth and hope it sustains up until 2026
Yeah, I
or the
mean,
midterms in 2026.
yeah, like you said, they were trying to do the right thing with the ripping the band-aid off beginning of April, but then they realized it was really serious. The stock market was really reacting because you know a lot of the trade deficit and current account deficit is running not because of foreigners, but because of U.S. corporations having outsourced everything to make a lot more profits. They hire cheap labor, and it's one of the reasons the stock market has stayed so elevated. So if you reverse that, it's a no-brainer that the stock market will come down, and I think that's why they backed down a little bit, and they're delaying these tariffs. They've just delayed the Chinese one for 90 months. So, yeah, they've gone with this big, beautiful bill and tax cuts. Um, I mean, I've never seen it work. It might work a little bit, But I heard someone asking Trump a few months ago, the deficits are really high, the budget deficits, and your big beautiful bill is going to make it even worse. And he said, "Oh, it has to get worse before it gets better." I've never, if I was me personally, my family, if we were in a lot of debt, I wouldn't try to get into more debt to get out of it. I would try to work harder, get children to work as well, and cut back, try to pay off debt. That's the only way you can do it. So I'm not sure how this is going to work.
Yeah. It seems like they have given up on that promise. Or if not, then they're gonna have to pull the trigger like now if they're gonna make it in time for late 2026. Where do you think eh, where do you think they go from here though? I mean, with the market spiraling, continuing to make new all-time highs, what are some of the ramifications of that? I mean, if people are going to see spiking food prices all over again, you're starting to see the commodity index break out as well. Isn't it a catch 22? Yes, you're not going to crash the economy, but you're going to get consumer inflation back up, and that was one of the big things that undid Biden.
Yeah, and I would add though that the money printing and the M2 increase happened on Trump's watch in 2020.
Mm,
I'm not saying Biden was perfect, but the CPI rose later. I mean, when Biden took over, but the inflation, the seeds were planted by Trump. So this time, he's president till 2028. So those seeds that are being planted now, that yeah, they could come home to roost before the midterms. Um, I mean, the only thing that is like a wild card is Jay Powell. I
mm.
saw a comment today. Trump said Jay Powell is going to leave very soon. I don't know if he means that May next year is very soon, or if he's got something up his sleeves. I think that would be the only thing that might well, he might think that will save him because they'll come in, they'll replace Powell with someone, and they'll come and cut rates by 1% in one meeting. Uh, I think that could be really disruptive, though, for the markets, paradoxically, because people, whenever you cut like this aggressively, markets think, well, there's a problem.
Yeah, yeah, it's like going to the doctor, and the doctor says, "Well, you know what? Things are really bad. I'm going to prescribe you some medicine." Or you fall on your arm, and you go to the doctor, and he puts a cast on it. That's not bullish for your arm. The fact that you've gotten a cast is actually bearish for your arm because you actually broke your arm. If you didn't need the cast, then your arm would be a lot better. But with them holding back on interest rates, could it be that the Fed just wants some few bullets in the chamber, if you will, for a crisis down the line? I mean, it does seem like something spooked them in April, like you said.
Yeah,
And yeah, go ahead.
yeah. So yeah, I mean, four. I think we're 4.25 to 4.5. The target. I mean, they got plenty of room to cut if there's a crisis. So maybe it's not that. I think it could even be the BRICS situation, and
Mm.
all the countries are bending the dollar, and the Fed knows that, and the only way to keep the dollar from dropping further is to keep rates high. That's how you do it. You attract foreign capital because you're paying 4.5, 4.25 instead of like 1 or 2% in other countries. So that could be the reason. And despite that, the dollar has dropped quite a bit this year, the dollar index. So can you imagine if they start cutting aggressively, it could be pretty bearish for the dollar, and that would lead to a lower dollar. That means the dollar is buying less, and if the currency buys less, that's higher prices. So yeah, they're really in a corner, not just President Trump, but the Fed as well.
Yeah. And speaking of foreign trade, we did see this new deal signed between the United States and the EU. Doesn't really seem much of a deal. It seems like a one-way transaction than anything else. To summarize, the United States will impose 15% tariffs on the EU and no reciprocal tariffs on the part of the EU to the United States, and 600 billion euros in weapons deal, a few more 100 billion euros in investments as well. But there doesn't seem to be any give and take. It just appears all take from the United States. But I mean, I'm not the biggest fan of von der Leyen and the World Economic Forum boys and the Davos crowd, if you will. But it does appear that they got pretty humiliated with this deal. It seems like it's kind of reminiscent of the Treaty of Versailles. It seems like this is going to probably create some reactionary groups in Europe as a result, because it was humiliating. I mean, in my view, at least.
Yeah, on paper, it looks bad, but don't forget, like the EU doesn't have an army. The EU is made up of, I don't know, 27 or 28 countries, and they still have to approve all these these decisions by von der Leyen. So yeah, it was a good headline grabbing deal, but I'm not sure if it's signed yet. So it still has to go through all the different countries and be approved. But I agree with you. Europe seems to have no backbone. But that's been happening the last few years. Look at Nord Stream 2. We know that it was the US that blew Nord Stream 2, but the Germans just take it and say nothing. So, yeah.
Yeah, I think it's going to lead to some unpleasant, unintended consequences as a result.
Yeah, it
But
could be the end of the EU. Like you said, the individual countries, the people, they won't like that, and politically, it could be explosive. You could see the right wing parties do even better, and they could come in, like what's her name in
Le
France?
Pen.
Le Pen could win the next election, or even though they're fighting hard to not allow her to win. But yeah, it could create a lot of political problems that could actually backfire on the U.S. because these new groups could come in and just like say, well, we're not playing along anymore with this deal.
Mm-hmm. Yeah, fascinating. Well, all right, Mario. I think we've covered a whole host of topics here. Anything else you want to talk about that we didn't get into before we sign off?
Yeah, maybe just the fact that here in the UK, I saw Trump today. He was in Turnberry, his golf club in Scotland, with the Prime Minister, Keir Starmer, and a reporter asked Trump if he knew that he could be censored now in the UK, and he said he didn't know. And then Keir Starmer tried to deflect that and say, "Oh, it's just to protect children on the internet." But I think the mood here in the UK is getting pretty bad. People are fed up with like the censoring that's going on, and they're fed up with the fact that they're allowing all these illegal migrants to come through over the channel from France and house them in 4-star hotels. So you never know. Something could kick off here this summer in the UK, and it could reverberate throughout Europe and the rest of the world.
Yeah, we shall certainly see. It's especially given the fact the interconnectedness of every country in the world. So, Mario, thank you so much for coming on, my friend. I'll have a link to your YouTube channel down below. It's Innecco64. So be sure to go over there and subscribe to Mario's channel. Great channel. I watch it all the time. Any other things you want to plug here, Mario? Do you have an X account?
Yeah, X account I do. I've got about 25,000 followers. It's at Innecco 1964. Be careful, there's a few like copycats there.
All right. We have the links to both of those down below. And guys, if you enjoyed this podcast, drop us a like and comment "Go Mario, go" in the comment section. If you disagree with anything, that's fine too. But let me know what and why you disagreed on, or what you disagreed on and why you disagreed on it. And finally, check us out on Substack at capitalcosm.substack.com to get early access, ad-free versions, and uncensored versions of all of our stuff. And of course, liking, commenting, subscribing, doing all the YouTube stuff certainly does go a long way. And it's free, and it helps boost this channel and videos like this in the algorithm. So a little bit certainly does go a long way in getting this message out to as many people as possible. Thank you guys for watching, and I will catch you later.